Good evening. Ira Epstein of Linn & Associates with your metal market wrap-up for this Wednesday, November 18th, 2020 at 6:15 p.m. Central Time. For those of you that are subscribers to my paid research, you were sent out tonight an invite for the webinar. We're going to hold one on November 23rd. That's this coming Monday at noon Central Time. You get the first dibs. You have no charges to get into that or anything, but I will be sending out Friday afternoon to the rest of you an invite for that. The seating is very limited. If you haven't attended them before, that's great. If you have, there's a certain amount you can attend and then you get a charge. Ideally, you're a subscriber, and we're now moved up the charges on the webinar to the same as a 1-month introductory subscription. So you have nothing to lose by taking a month and trying that. I'm now figuring out also my next special report that I'm going to do tomorrow. You know, I did a silver one. Now I'm looking at the next report I'll do. So let's talk about the silver today. Silver market staying right at that key 18-day average. I mean, it's classic what I was writing about, and it's classic what the market's done. You came up, you had a nice rally. Some profits could have been taken by traders on some of the trade. Now the question is, can the market hold this area to do more? The copper market backing off in the evening trade. We had a huge rally in the platinum today, so it's giving back a chunk of that. In looking at what's going on in the currency markets, I'm still thinking they're not ready to do much one way or the other. We're at a difficult point in stock indices. We're at an inflection point in a number of other markets. Why? Because the market now knows that both Moderna, Pfizer's drugs, they're about 95% accurate for the general population. They're turning in the paperwork now. We're just days away before the FDA gets it. I don't know if there'll be hearings on it or what the FDA does, but the process depends on how long the FDA wants to take. From the time they get the paperwork, I've read that it's anywhere from 2 to 4 weeks. So we're probably on a perfect world mid-December that we're going to see that the talk of the vaccines coming out. In between then, remember what we talked about over the weekend, half full, half empty glass. We now know that that's coming, but we have to deal with the day-to-day headlines, which are record amounts of COVID-19, hospitals overrun, the death rates going up, and more shut-ins. In Chicago today, I can tell you my own city, I can tell you New York. New York on Thursday, no more public school. City's closing it down. Chicago, you want to go to a shop somewhere. If it's open, 25% capacity. All indoor dining is shut. Everything else is shut. The gyms, you name it, they're shut. If there were movie theaters open, they are now shut as well. You want to go out to your grocery store, to a drugstore, 50% capacity rule. So they'll have to have people there watching the front door. We've all been through this, but I'm just giving you what it is. And I promise you, every state is doing its darn best not to have a lockdown. Shut-in's one thing, voluntary another, but if it gets real bad, there's going to be more. And the stock market's fighting with that too. So as we take a look at gold, it's not doing well in that environment. Gold probably needs to wait for just around the Christmas time is my guess. You know, sometimes at this time of the year, the gold merchants are buying their gold for Christmas. Nobody's going to jewelry stores. They can do it online. But at least in Chicago, I doubt that they're going. And you can see that you've got the higher high, lower low pattern. You're down for the week $17. You're back with a downside momentum. When we take a look at the chart through here, tell me that this market's done anything. Since this day, you have done literally nothing but churn people one way or the other. It's a market to stay away from, but it threw out new sell signals today. You've now got lower highs, lower lows, downtrend. Where's the 18-day average of closes? Above the market. Therefore, the bias is down. That confirms the swing line is down. Where's the Bollinger Band? Around the 1838 level, 1837.70, a potential target if the market has momentum to get down there, and that's where the problem comes in. The problem comes in that you're already oversold in the market. I don't think you get the bears getting aggressive on a freshly oversold market. So a difficult market. Remember I said you're at one of these funny points. Now, I'll give you a number that negates the downtrend but doesn't start an uptrend. Get back over 1892.70. That would give you a lower low, higher high pattern. But until that happens, those that want to press on the market, I think they'll find an easier time to the downside than the upside right now, barring some overwhelming piece of news overnight that comes out. In the D's gold versus silver, I still like silver more than gold. You haven't seen this ratio cross over the 18-day average of closes. When I take a look at silver, you've got a pattern of a stall. So you now have a pattern of higher lows, you see that, but you have lower highs. So you're narrowing in just like this. I wrote that I thought these markets were going to have this battle right through here. I have not changed my opinion. What you're really caught in, if you step back like I do, you're caught in sideways action, which is typically narrower than this, and I call it a pipe. I can just call it sideways action. I call this too big of a range. $2.30 is not what I call a pipe. Maybe $1 range would be it for the price of silver. That's way too much. But the market's just churning right here. And if you're trying to make something out of it, you're probably getting yourself frustrated. Don't. Play the game. In the copper market, you don't fight upper Bollinger Bands. The market, when it gets to it, as bullish as you can be, understand it's only going to stay over those black algorithm top 5% of the time. That doesn't mean you have to turn bearish. What the market's now doing is you've got a pattern of lower highs, you see them, but the legacy is higher lows. Like silver, it's run into its pause number. I wait and see what it wants to do. We had been in overbought territory. You can see any reading over 70 is that. Tonight, and this is evening trade, we still are. Both numbers are still over the 70 level. I'm content sideline. In the platinum, take a look at today's action. Powerful. You got over the upper Bollinger Band. What are the odds of staying over it? Now, you had an uptrend coming in. You had higher lows, and let me just show you this. You had your uptrend right in place here. So the resistance, if you can get there, is the 100-day in the upper Bollinger Band. You made your run to it Monday. You kept going, and what you did today is you tried to break, and then you came back with an outside day up, and tonight you're getting a bit of a correction. What is the number that you don't want to see taken out? It's right through here, 914.20. That's the number. So we had the platinum console come out. We've got the silver console came out today. If you get my full research, and I'll talk to you about that in a minute, I gave a whole write-up on what those consoles are predicting for 2021. And this gave this market a boost. In the palladium market, you tried the boost today and then you fell right back. So you've got a higher high, lower low. Do you not see how many days in a row you're hitting the 18-day average of closes? There are times when markets aren't trending. You're in it. This is what I call the chop market. Just back and forth through here, taking people's money as they try to do something out of nothing. And you have nothing on that chart. Last, the dollar index, it is very oversold. There's a point where I say, you know, you're just eking out lower and lows slightly each day. I'd be very careful here. When I see this and that pattern, it's not unusual to get a good bounce in the market to alleviate it. You'd have to get over 93.20 to break this trend. I saw one person today on CNBC that is bullish the dollar. Everybody else remains bearish. I remain in the oversold area. I had been on my written updates bearish with positions. Now we're taking a look at the flat to see what the market's going to do. Now, I keep talking about my research. If you haven't tried it, I'd like to give you 2 weeks free. No obligation, no credit card, nothing. If you haven't seen what I do, which includes 2 written updates a day, it also includes my morning videos. It includes my special reports, access to a webinar. I'd like to give it to you. Once the clock ticks on it, it's over. My written updates will look very much in this manner, not with the little garble that you're seeing right there. I apologize for that video world. What can you do? I will describe trades, the risk associated with the trade, give you an idea. I've gotten rid of audio commentary, so we'll be changing that for it. I found that it just most of the people signing up didn't even want it. They want the audio parts that are in the videos with pictures. That's what I think you should do. How do you get all this? It's simple. You go to our website, you sign up on the bottom right, it says free offerings, and away you go. You can call my staff, they can get you set up as well. It goes all over the world, so wherever you're at, be happy to give it to you. Away you go from there. Remember, we're going to have the webinar Monday at noon, Chicago time, that's Central time. Most of you that are not subscribers didn't get it. I have a favor to ask of everybody. If you like these videos, can you hit like? If you don't like them, hit don't like. Be honest. Tell me what you don't like about them, what you do like about them, whatever it is. The following will grow from the more people that like them, obviously. If you don't like them, maybe I shouldn't do them. I think most of you like them. I'm Ira Epstein. You have a great day. I'll talk to you tomorrow.